opportunity, and this is a Canadian company I referred to earlier, Dorel Industries. It owns a bunch of brands in the bicycle space like Cannondale, Schwinn, GT, and Mongoose. I've seen those, but it also manufactures things like baby seats and high chairs for little kids and a bunch of other stuff branded under the DII.B label. So it's a bit of a kind of industrial brands management company and the outsourced manufacturing. 862 million US dollars. Okay, that's after you've converted from Canadian. So modest company by our normal international standards. Price earnings ratio is sky high, meaning it probably had a rather modest profit in its prior year. Maybe there's some sort of turnaround going on. 2,675 dividend yield though. So it is paying dividends. That's unusual. 4.49%, quite high.
Yes.
So what do you say? Those brands, how do they feature in the market?
They nice brands, nice collection of brands. So I think what they've tried to do is understand that niche part of it, and at the back end have the production facilities that are efficient and the buying power, etc. But have individual brands that cater to their subcultures, and each one of these brands does have its own appeal. And if they can make that efficient, I think there is a business here. So there is a bit of a consolidation going on among cycling brands globally. That is a trend, and this Dorel Industries, I think, is playing off against that. And as you point out, cycling is not the entire business. They have these so-called juvenile products.
Yes.
It's a bit of a strange name because
high chairs and car seats.
Yeah, and prams, which mean baby products, whether they call them juvenile products. But and quite big in that market. So multi-brand company with all these market segments that they're playing into, and done quite nicely actually. They will grow by acquisition, by buying more brands, I believe, and if they can maintain their market positions, they most probably can keep that momentum going.
And there's a Schwartz family, I don't know about control, but there was a merger of two companies. Share chart though does look a little bit all over the show. But I guess, as you say, it could be that it's looking to reinvigorate itself. I suppose a little bit of an uptick earnings-based. I don't know, are you sufficiently... I suppose you'd have to look closely and understand why that price-earnings ratio is so high, because that would mean there's something going on.
I think there was some accounting adjustments there where they had some restructuring that they're doing. They speak of that in their results. I tend to be hot on this one.
I'm going to pass. It feels to me like a small company that I don't know enough about.